Decker here. Hope you're doing well. So, the gold price and the silver price coming under some significant pressure today. The reason, honestly, it's really no surprise that this is happening. We're going to talk about the causes of this decline in the spot price of gold and silver, what is driving it, and then the truth, which I think is really going to shock markets and investors when they realize what's going on here. So let's take a look at the charts of gold and silver first, and you can see how significant this decline is. This is the daily. We're now down to just over $2,000 in the spot price of gold. And then in silver, similarly coming under significant pressure today, just above 23 bucks. Now, what drove this sell-off that we're seeing today in the price of gold and silver? Well, surprise, surprise. We had the non-farm payroll number, the government employment report that investors and traders always seem to focus on so much. It came out and it was a surprise to the upside. Let me see your shocked faces here that the government numbers are painting a good picture of what's going on in the job market. Now, we've got 199,000 jobs added in November. That is an uptick from 150,000 the previous month. However, a big factor driving this increase in jobs was that striking manufacturing workers and Hollywood actors are coming back into the workforce. And actually, if you take out all of these striking workers who are returning, and of course, this is the official numbers from the government. If you take them out, the job numbers don't look so rosy. But listen, this is a better than expected jobs report. But when you see this, you got to understand, these are the government numbers, right? It's kind of their job to maintain the status quo, to make everything look very positive. And what are we seeing here? Well, you add more jobs than expected, and you get the price of gold and silver declining. Why? Well, less anticipation that the Fed is going to need to intervene. Of course, next year, 2024, an election year, a weakening job market would indicate the Federal Reserve will come under additional pressure to print. But of course, the opposite of that is also true. A good jobs report has markets convinced that the Fed will not be under as much pressure to print. So that's what's going on. But listen, I view this primarily as a buying opportunity. I know a lot of people, when they saw gold spiking, let's get rid of that, spiking up to this record all-time high on Sunday night, thought, well, that's it. I won't have another opportunity to get into these markets. Well, here you go. Here's the opportunity. How low is gold going to go, though, from here? Is the sell-off done? Well, I think that what we've seen now is that 2,000 is basically the new floor for the gold price. Does that mean that it won't fall below that? No, not necessarily, but I do think that any drop into the 1,900 territory is going to cause investors, stackers, pretty much everybody to come out and do significant buying. Of course, central banks too, they're going to be buying. And wherever gold goes, I believe silver will follow. Silver's super cheap right now. Silver at 23 bucks is crazy, but when you look at this drop, you've got to ask yourself, where is the jobs market heading from here? Do you believe the non-farm payroll report that came out today, the government numbers, or do you buy into all the other indicators that we're getting? We had the ADP report. That's non-government private payrolls from a private organization, ADP. That came out weaker than expected. We had the JOLTS numbers showing job openings at the lowest level since March of 2021. A lot of signs. We had the Wells Fargo CEO come out and tell us that they're going to be laying off. That's a little Freudian slip of mine there, as we see the lying non-farm payroll number. But we had the Wells Fargo CEO come out and tell us that he's going to be laying off a big chunk of that bank's workforce. So there's a lot of indicators that the job market is weakening here. And that's why I tend not to buy into the rosy government jobs numbers. Let me know what you think in the chat below. Do you think that we can trust these government jobs numbers, or do you think that all of the other numbers that we're getting, which indicate a weakening job market, are the accurate picture? Put a 1 if you believe the job market is weakening. Put a 2 if you think that we've got a great job market and the strongest economy ever, as we're always being told by the folks at the Federal Reserve and the powers that be. Because I think it's pretty clear here that the U.S. economy is on the rocks. I'm seeing a lot of 1s. I don't see too many 2s. And I tend to agree with you. And that's why I view this decline in the price of gold and silver as a major buying opportunity. Now, look, I put out a video yesterday highlighting some of the weaknesses of physical gold and silver as investments and why, by a lot of standards, they're kind of terrible investments. Of course, I'm still stacking them for a lot of reasons, but one of the downsides to gold and silver is that they are volatile. I mean, silver even more so than gold, but both metals are volatile. But to a stacker, a pullback is really a gift, because unless you were looking to sell all of your bullion, why would you care if the price falls? I mean, to me, I like to buy things when they're on sale personally. I don't tend to buy things when the price goes up. I like to buy when the price goes down. So, am I buying right here? Not necessarily. I'm still kind of waiting by the sidelines. I think there may be even a bit of a further retracement, but once we get down into the 1900s, I think we're going to see some significant buying that will keep the price around 2000, or at least, slightly above that. But look, the thing that's going to shock markets here is how bad the economy and the job market is going to get in 2024, because they can, cook these numbers as much as they want. There's only so much that can be done to convince people that the economy is okay. Now, look, if you want to buy some gold and silver on this dip, I'm still waiting maybe a little bit for a decline. If I didn't have any gold and silver, though, I would be viewing this as a huge opportunity. I already have a pretty strong position in the physical metals, so I'm being a little bit more selective. I'm waiting for a bit more of a pullback before I consider adding to my stack here. But if you want to get some gold and silver, I've got a link down in the description for SD Bullion. That's where I buy my gold and silver. And look, I don't care if you buy gold and silver. I don't care if you buy it from them. That's where I buy my gold and silver. I've been buying from them for years, and I always have a good experience there. So if you're in the market and you want a place where you're going to get gold and silver and you're going to get competitive prices and fast shipping and good customer service, check out SD Bullion. But look, the jobs numbers are cooked, basically. The government numbers, in my opinion. You got the CPI numbers are cooked, the jobs numbers are cooked. All this government data is designed to convince everybody that the economy is strong. That's why Powell is constantly referencing how strong the economy is. And this is, good news for him in the sense that they want to, maintain tighter policy to help keep a cap on inflation. But that fight is done. But they're going to continue always the powers that be are going to paint a rosy picture of what is going on. I mean, inflation could soar out of control, and I bet that when it does, they're going to tell you how good it is for you if you have debt, because you'll be able to pay it off in devalued currency. But this is why this jobs number doesn't really faze me when it comes to gold and silver. And I will be looking for opportunities to add to my positions here, because when the reality of these job markets come out, and it doesn't take a genius to understand what's going on. As I said, you've got ADP numbers, JOLTS numbers, the Wells Fargo CEO, number of companies laying off employees across the board. So the fact that some people who were striking is going back to work doesn't indicate to me that things are strong. It just indicates that we're getting a bit of a reprieve. And, this is like Biden telling us that we've got the strongest economy on record because of all the jobs we're adding, when all those jobs that were added were just ones from the pandemic shutdown. It's like you shut down the economy, lay everybody off, and then when people start coming back to work, you say, look at all these jobs we're adding. But this is exactly the same story as that. And, it's not a great sign for the economy, despite the fact that markets are interpreting as such. But, again, this is to a stacker. This is a huge gift. Any opportunity we get to buy gold and silver at lower prices, I think, is something which should 100% be seized upon. Now, let's talk about some other events that we're seeing develop in the news, which lead me to believe that in the long run, gold and silver will be going much higher. This is one from South America. So we've been talking a lot about geopolitical developments. on the channel. In fact, it was on Sunday night some news out of the Red Sea that had contributed to that spike up in gold and silver. Well, look at this one now. We've got Venezuela, who's trying to annex parts of Guyana, oil-rich areas in Guyana, which are largely unpopulated. But now the U.S. has announced military drills with Guyana amid this dispute over an oil-rich region. So, we just continue to see this World War III situation play out. And this is another thing that could shock markets. If we see an escalation in any of these conflicts, and now how many fronts do we have? I mean, you've got Ukraine, you have got the Middle East, the Red Sea, Israel, Gaza, you have got North and South Korea potentially, you've got the South China Sea, and now right in the United States' own backyard, this developing conflict between Venezuela and Guyana. And all of this conflict, there's a lot of uncertainty around all of these things, but one thing that is 100% guaranteed, if you ask me, and I don't think anybody's going to disagree with this one, is that this number, the U.S. national debt, is going to be driven much higher by all of this conflict. And Johnny B in the comments here, that is a great point. If one rocket lands in the wrong place, it's on. 100%, Johnny. I agree with that. And look, I mean, all of these potential hotspots around the world are presenting a huge possibility for escalation here. And when that happens, well, I mean, the price of gold and silver, it's not going to be dropping. I can tell you that much. And on the same note, this is some news that we got just 29 minutes ago from Reuters. Israel intensifies Gaza strikes, U.S. alarmed. So we have got Israel sharply stepping up strikes on the Gaza Strip, pounding the length of the Palestinian enclave and killing hundreds in a new expanded phase of the war that Washington said veered from Israeli promises to do more to protect civilians. So, investors may be focusing right now on the U.S. job market, which is, surprise, surprise, the government telling us it's strong. Whereas there's a lot of things going on around the world which indicate that, a lot of money is going to be created, a lot of money is going to be pulled out of the future and spent into the now. This is going to continue throughout 2024. You've got Saudi Arabia, the UAE, a lot of these countries joining BRICS in January, which is now just weeks away. The geopolitical lines are drawn, so pretty soon, I don't even think the U.S. jobs market is going to matter too much. And do you think it's much of a coincidence that just as the U.S. is entering into, we're already in a recession, maybe entering into a massive economic decline, a massive depression, that you have got all of these conflicts breaking out around the world? I don't think it's a coincidence at all. I would love to know what you have to say. And do me a favor real quick. We're at 186 people on this live stream, so I do greatly appreciate all of you who are tuning in. Do me a favor. We got 41 likes. Can we get that to 100? I mean, if everybody smashed the like button, we'd be there in moments, but I would appreciate that. And I think this is important information to get out there. One thing I see in the gold and silver market is, at least based on the feedback I get in the comments section on this channel, is you get kind of this bipolar attitude. You see, when the price spikes up like this, people are saying, well, gold's too expensive now. I don't want to stack it. But then when you see the price dropping like this, I'll have people leaving comments along the lines of, well, the party's over. It looks like gold and silver are headed lower. So, which is it? If you want to stack gold and silver at a low price, this is exactly the kind of development you should be looking for. And again, the dynamic that we're seeing today is a strong U.S. economy, strong job market brings gold and silver lower. Well, what do you think's going to happen in 2024? I mean, do you think that the job market is going to strengthen, or do you think it's going to weaken? Because if a strong jobs market means lower prices for gold and silver, well, I tend to believe that negative economic data, weak job numbers, that would make sense that will be driving the price of gold and silver higher, right? I mean, it just seems like an obvious conclusion to draw here. And my bet, what I'm betting on, is that the economy will continue to show significant signs of weakness in 2024. Maybe we'll get a boost to GDP from all the wars that are breaking out. That's possible. Maybe we'll get a boost to jobs in the armaments industry. That's possible. But that is going to do nothing to bring inflation back down. In fact, those developments are going to make it much worse. And again, that's why I'm stacking here. I do think we could see these prices fall a little bit lower. we could see gold drop into the 1900. I don't know what the bottom's going to be for silver. Maybe, and again, I don't have a crystal ball. I don't know what's going to happen in the short term. Obviously, if I did, I wouldn't be making these videos, right? I wouldn't be doing anything except just trading in the short term, because if you have a 100% clear idea of where markets are going in the short term, then just use a tremendous amount of leverage and you'll be a billionaire in no short order. That's why I say, people who tell me, well, the price of gold and silver are going to plummet from here. It's like, okay, how big's your short position? You must be out there buying put options on GLD and SLV, right? But of course they're not. I mean, and I don't know where gold and silver are going to go in the short term. I can't see them falling much further, although there could be a bit more weakness. Of course, I do think that 2000 is now more or less the bottom for gold. Any drop below that, I think, will trigger a tremendous amount of buying, and it won't stay there for long. That's why if it does drop, I'll be buying, hand over fist. Of course, I don't have that much dry powder left. A lot of it has been put into gold and silver, but I feel very comfortable with that in this environment. In this environment where we have, despite what you hear from the non-farm payroll, a weakening job market here in the U.S., and that's predictable. As long as the Fed maintains rates where they are, if they even go higher, I mean, they could hike, who knows? Again, I don't have a crystal ball. The debt-addicted U.S. economy is going to continue to come under a tremendous amount of pressure. So no matter how good Jerome Powell tells me the job market and the economy are, I just don't buy it personally. And I have a feeling that a lot of you don't buy it either. So again, you see good jobs numbers come out, you see gold and silver plummet. I just say thank you so much for the opportunity to buy gold and silver. And, one last thing I will say here is that we hear a lot of talk about manipulation in the gold and silver market, and I don't think that it's to the extent that a lot of people believe it is. I don't think there's some guy sitting in a cigar lounge somewhere, puffing on his cigar, saying, today the gold price will be $2,005. I don't think it really works that way, but there is sort of this soft manipulation in the sense that we are told that the economy is much stronger than it really is. And that is sort of a form of manipulation in and of itself. But again, when the price of an asset is manipulated artificially lower, whether that be by, some machinations in the market, or whether it just be a Federal Reserve governor or chairman jawboning the markets lower, or a manipulated government report, that is sort of a form of manipulation. But look, when gold and silver get manipulated lower, if you're a stacker, really you should just say thank you. I mean, if you believe that an asset is being manipulated artificially low, below its real value, then you want to buy that asset, right? I don't know. I mean, to me, that just makes sense that if, silver's real value is above $23, but it's at $23 because of some form of manipulation, whether hard or soft manipulation, that looks like something I want to buy. I don't want to buy things that are above their real value, like many of the paper assets that we see right now, stocks trading at near record high PEs, ratios. I like to buy things that are cheap. So gold and silver is still very cheap, despite the fact that gold is, still very close to its all-time high. I still think it's very cheap. And if you look at the inflation-adjusted all-time high, gold is very, very cheap. The inflation-adjusted all-time high, even using the government CPI, is something like $3,300. The inflation-adjusted all-time high for silver is like $200. I mean, we're at, about a tenth of that. So I will still be looking for opportunities to add. And honestly, you can wait for the price to fall a bit further. Of course, that always could happen, and I'm kind of doing that right now. I'm looking for maybe a bit more of a decline before I really convert some more fiat into metal. But at the end of the day, when gold and silver really catch a bid, when the bull market takes off, and that is coming. I mean, you just look at the long-term chart of gold. I'll pull up the weekly chart for you here, and we still have this incredibly bullish cup and handle formation in the long-term chart of gold, which has not been invalidated one bit by this pullback. When we get a close above $2,100 and gold is heading to potentially new real all-time highs, $3,000 plus, and silver goes along for the ride, I'm not really going to care if I bought gold at $2,005 or if I bought gold at $1,900 or $1,950. I mean, I'm just going to care how much of it I have. I'm going to be measuring my wealth in ounces rather than in fiat currency. And, none of this is financial advice. I'm not suggesting any of you do that. You do you. You stack whatever you want. As I say, people seem to get a kick out of it. I say, stack Pop Tarts if you want. It doesn't matter to me. I'm just telling you what I'm doing. This is not financial advice, and stacking gold and silver is not for anybody, not for everybody. But to me, I view them as incredibly undervalued assets. Silver, especially. I mean, silver is just so cheap right now that I'm going to keep stacking them. And maybe you want to stack something else. Maybe you want to invest in something else. Maybe you want to buy tech stocks. Maybe you want to buy cryptocurrency. Bitcoin's on a pretty good run right now too. Although, I've had a lot of people mention that in the chat. Although a lot of that seems to be driven by the moves or the talk of a Bitcoin ETF. I'll talk about that real quick because I've been thinking about that. The move in Bitcoin, which is still well below its all-time high. So gold, is doing better than Bitcoin in a lot of ways. Bitcoin more volatile, of course. But I don't hate Bitcoin. I actually do own a little bit of Bitcoin, but occasionally I buy lottery tickets too. So don't take that as an endorsement of Bitcoin. But a lot of that seems to be driven by this talk of an ETF. To me, I don't really know what the ETF is going to do for Bitcoin. I mean, if you want to buy Bitcoin, you just go out and you buy it, right? You put it in a wallet, put it in a hardware wallet or a paper wallet somewhere off of an exchange, and you kind of sit on it. That's my view of that. If you want to stack Bitcoin, nothing wrong with that. I do view it as a highly speculative asset. But I don't know what the ETF is going to do to boost the price of Bitcoin. If you're a crypto expert, you watch this channel or you know something about crypto, I don't know that much about it. I know that, it's highly volatile. Maybe it'll hit new highs. I don't know. It's better than fiat probably. But let me know. But I just don't get the hype around the Bitcoin ETF. Like, how is that going to help the price of Bitcoin? I guess more people will be able to buy it, but it's not hard to buy Bitcoin now. So I don't know how an ETF is going to help the price of Bitcoin. Johnny B says, I'm not a fan of Bitcoin. Well, I'm kind of neutral on it. I mean, as I said, I do have some, but I don't hate it or anything. I just view it as, it's not digital gold. Let's put it that way. A lot of people seem to think, sell all your gold and buy Bitcoin. I forget who it was. Someone was running an advertising campaign like that. One of these Bitcoin investment funds a couple years ago was saying, sell all your gold and convert it into Bitcoin. Well, I think that's kind of a fool's errand, but if you want to have some fun. But the price action in that is kind of interesting lately. That's moving up too. But I think gold and silver ultimately are really the safe stores of value. They're the only asset out there that has been a safe store of value for thousands of years. So when you look at an economy which has 33.8 trillion dollars. Look how close we are to 33.9. We're definitely going to hit 34 by the end of the year. If they get a funding package for the Ukraine war and the Middle East war, this is 100% going to hit 34 trillion by the end of the year. But I mean, at the pace it's moving, I think we're going to hit that too. But when you have that, when you have a world on the verge of war, when you have the BRICS nations potentially dumping the dollar for their transactions, the end of the petrodollar around the corner, I just think it's kind of a no-brainer to have some hard assets. But let me know what you think in the comments down below. Thanks for watching, everybody. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker, out.